Hello, everybody. It's the 25th of Feb, and today we're going to use the two-step model. We're going to find direction. That's the first thing we're going to do between 9:30 and 10:15. We're going to wait for a retracement into a fair value gap, and then finally we're going to find an overlap between the fair value gap and the fib. And these three things will help us determine if there's a trade or no trade. So as always, I am doing this specifically on the 5 minutes time frame. What that means is if I see a setup on any other time frame, I will ignore it. I will record it, but I will ignore it. So I'm specifically trying to show this model on the 5 minute time frame. Right now you can see I'm on ES. I'm on the 50 minutes, so I'm just going to swap it to the 5 minutes. Okay, and as you can see, we have just opened right here, right here. So we've just opened at 9:30. So the next step, really simple, is I just wait 30 to 45 minutes. So something may happen in that time. Okay, so I'm just going to wait. What I'm looking for specifically is a very obvious swing high and very obvious swing low for the 5 minutes. Right now, this is the most obvious swing low, and then I'm just going to wait for a swing high to happen within that time. All right, so it's 10. We do have this swing low and this swing high right here. So that's been formed because we have three bars at the top and three bars at the bottom. Now, I do have this 5 minute fair value gap that we haven't tagged yet. So I'll just mark that. And we have, let's just do step 3. Okay, so we mark that in yellow for 5 minutes. And let's grab a fib. We'll run the fib from this low to this high. As long as that high and that low stays in place, we've got this overlap right here. So between the 60 and the 70, we've got an overlap. What I want to see is price come into that fair value gap and for price to hold. This is very important. Price must hold, and then I want to see a rejection. As soon as I see that rejection, either on any time frame, 1 minute, 2 minute, 3 minute, 5 minute, doesn't matter. As long as it's 5 minutes or below, if I see a rejection inside this fair value gap, I will then use it to form a trade. So an entry, stop loss, and a targeting. Now targeting is easy because it's a measured move. So I'm just gonna wait for price to come into that fair value gap. If it doesn't do that, then no trade for me. So I'm just gonna wait for price to come into the fair value gap and then wait for the rejection. Right, it's 10:10. Uh, so the 5 minutes hasn't shown any real rejection yet. We have a small rejection on the 1 minute, but I'm waiting to see if we get a break of structure on the 1 minute. If we don't, and we close below that fair value gap, then it will be no trade long today. There may be a reversal trade, a short trade, but I would have to wait for price to then close or get below this pink box in order to then rerun the model. But I'm still watching this 5 minute fair value gap. Okay, so it's 10:15. We are failing to make any market structure shift on the lower time frame, so the 1 minute, and we are heavily bearish. So this fair value gap really can be ignored in terms of this directional move. Okay, so I can just flip it, and what I need, preferably, so we still have the swing high, we have the swing low. If we then form another swing low, preferably I would want it below this box, or at least below this level. I form a swing, then I'll just be repeating the same process. So direction, retracement. That's all I'm looking for. Right now, this fair value gap is being ignored. I'm watching the 1 minute, the 5 minute, and the 15 minute, and it's really failing to make any structural shifts. So I've still got my eyes on it, but I'm just letting you know in advance, if we completely disrespect this, so we close below it, then this will become useless. It's 10:25. I'm still waiting for a rejection of this fair value gap, or for it to just disrespect it. At the moment, it's just really going sideways, not really doing much. So I'm looking specifically for a market structure shift on the 1 minute, something clear and simple. Uh, the 5 minute is just not really doing anything obvious. It's just really just going up and down in that fair value gap. So one of those things should happen before I take a trade to the long side. But if it disrespects the fair value gap, then that long trade is no longer feasible, right? It's just going to be dead. All right, so I've seen it. I'm long here, stop loss right below this low. So let's calculate the targeting. Just take the fib, put it on the low of that swing point right there, and it's 100%. So I'll just make this smaller. Hopefully you can still see it. And the targeting is going to be right here. So I'll drag that there. That's pretty much it. Okay, so just to double check, the point value there is more than 20 points. So that's good. 20 points or more, that's all I'm looking for. And that's one of the criteria for the directional move. It has to be 20 points or more, right? So we get that 20 points, just 20 points there. So that's good enough. So that's all I'm looking to get here. It's just a 100% move of the original directional move. All right, guys, it's 11:45 a.m. We are. It's been a difficult one because it came very close to my stop loss. I mean, we are talking, we are we are talking really tiny. I mean, it was that close, very close. But managed to escape. That's just because I took the entry right here. Once I saw that market structure shift, price did come down. Um, and went very close, very close. We are now tapping into our TP, so I'm pretty much good to go here. That's pretty much it. So this is the two-step model. We have direction. That's the first thing we always look for. Then we get the retracement. That goes into a fair value gap. And once we can see price holding and then rejecting, we take our entry. So entry, stop loss, targeting. So all that bit is experience. And the targeting, fairly easy. It's just a measured move. So if you found it interesting or you found the model to your liking, stay tuned. I'll see you in the next video.